All right, traders, welcome to today's end of day recap. This is Christian from Trade Trade Group, and it is Monday, April 11th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the whole risk disclaimer here. So, theme kind of remains the same. I haven't really had to change this too much. Risk off is basically the theme. We're seeing that in multiple areas. We can go through some of these charts, but basically it's the VIX higher. It is yields up. Now that's the sixth day in a row. That's kind of where I want to start because I think that this is starting to get, first of all, it's damaging. But it's also a pretty extreme move. We've had 6 days. This is the TLT, but you could look at the 30-year bond futures as well, which I tend to look at, which is /ZB on the Thinkorswim. But you're looking at a 7% move at this point in what's going on in the TLT. If you want to look at this, and everybody tends to look at the 10-year yields. But regardless of how you slice and dice it, this is a pretty extreme move for what we're seeing in just a short amount of time. My view on all of this is that usually equities, because I'm mainly an equity trader, is that equities can handle moves like this, provided that they're slow and gradual. When you start really yanking up yields like this, it could have a pretty big effect. And this could be what the Fed is kind of looking for to some extent. We certainly hear from, it seems like a different Fed speaker every couple of hours. And, this is one way that you get inflation down, is when you drive rates up like this. You're gonna have issues with, people aren't going to be buying houses. They aren't going to be financing as many cars because you can't afford it when you have a jump like this. So it's not gradual. These moves that are not gradual are quite a hit, right, to multiple different areas. And I get a couple questions about this every now and then, but people are like, well, I understand this area of the market or that area of the market. I don't know. I don't understand why it's affecting tech or growth stocks. Well, because, when you're dealing with growth stocks and they've got, obviously like a heavy growth rate, that is going to be going out for several years, right? That when someone does a valuation model, they discount those flows, those projected flows back. The bigger the interest rate that you use to discount that back to, that means that you have less of a number, right? So that goes into also the PE ratio, and that goes into the side of, you're basically drawing down your earnings expected rate, and that's going to change. That's changing the whole dynamics there. So so if you're still wondering why there's a relationship between yields and growth stocks, that's basically it. And again, it's not that much of a big deal when it's a gradual, slow move. When it's a very fast move, then it can upset things in the short term. And that's basically what's going on. But yeah, let's see if we could move this back a little bit. It's a fast move. It's a really fast move that's happening. So are we getting extreme at this point? So again, I'm spending a lot of time here because, I think if you're in front of the screens and you're following along, there is this relationship where when one goes down, the other one is going down at the same time. So there's a lot of also, heavy quant models that are saying, hey, basically, if yields are doing this, right, then, in our model, then we should be selling stocks. And what kind of stocks? Probably growth stocks. But here's your move. We have taken out a bunch of these. We are now, like I said, so this is the 30-year bond. So this is a 24 RSI. So, I would think a bounce is coming. I don't know if that's going to be due, if that's going to happen. It could happen. With tomorrow's economics that come out, everybody's going to be talking about the CPI report in one way or another. They're only expecting a point. do look at the survey and what they are implying or expecting, they're looking for 1.2% month over month. When you strip out food and energy, they're looking at a 0.5%. And here's the CPI year over year, which will get adjusted as well. But really the monthly number will be what people are watching. We also get real average hourly earnings year over year. And then of course, later in the week, we're going to get the PPI, which for whatever reason, the news wires just they don't pick up, right? All the big attention is on the CPI number. But it's funny because the Fed actually uses, I believe, more in what they're doing, the PCE deflator. Nobody talked about that a week ago, which came out, basically in line towards with expectations. And nobody also talks about the PPI report too, which comes out a day after the CPI report. Then we also get retail sales later in the week too. So one of these data points could cause bonds to rally. There's also more things, and we don't know what's going on as far as Russia and Ukraine, because there is a rumor out there that Russia is using chemical weapons, right? So I would think that would cause bonds to rally too. So at this point, right, and this is just like with anything, when it gets oversold or overbought, it begins that anything may cause a bounce in the group. So you may get a relief rally, but it's really difficult to time when that's going to happen. I mean, considering that this is the what did I say over here? Six day in a row for, and again, we'll use TLT in here, but it's difficult to say what day this is going to be. But 1, 2, 3, 4, 5, 6 straight days of red here in bonds. Okay, so let's go over and let's talk about equities. But again, I think that what's going on in rates is a very big factor right now. So down 1.7%. One of the things that I keep noticing on days like this, specifically, I was looking a lot at the NASDAQ because that was getting hit hard. So let's look at let's look at the 5-minute chart. Notice what happens here when there's heavy selling or a lot of program selling. Notice these long wicks on these candles, right? So this is what we've been talking about for all of last week too, is that especially if you're looking at 5-minute bars, and that's the chart that I'm on. Now, if you're looking at 5-minute bars or candles, and if you're watching how this develops, but many times the first 1-2 minutes of the beginning of the bar will be green, and then there's selling in the last 2 or 3 minutes that actually turns the bar from like full green to red, just like this. So it really means when you have this going on is you've got some heavy selling going on, especially in the indices, and you can go through single names too, but I find this very much very pronounced when you look at these futures charts, right? And it just means, I think, that somebody has a lot of selling to doing, and they're not letting, every time this market rallies, that's where they sell the heaviest, right? Here was it almost like the algo got, or whatever system that they're using. Remember, don't fault the algos, right? This is someone who's, that term gets thrown around all the time. Oh, it's the algos, right? It's the person behind the computer system, right? Who's pushing the buttons to initiate. Remember, all the algos the algorithms is just a way to help facilitate or execute an order in the most efficient way possible. When I was an institutional trader, I had about 7 or 8 different algorithms that I could use. We called them smart algos, right? Where we could they would be looking at a whole bunch of different factors as they would execute an order. But it was just a different way to execute an order. That's all. So some algorithms will basically do that. They'll start really selling, into that strength and sell a little bit more. But it felt like on this bar here at right around 245, it was one of the only green bars. Now, again, there could be a buy program that could certainly outweigh the selling, but you could see what happened thereafter, right? And you could see the volume. Right. Notice how this was a pretty decent sized volume bar, green bar, and the very next one had even more volume on it to keep the price in check. Notice small volume here, And again, as price try to kind of really turn the corner for the day, right around 3 o'clock, look at the heavy volume. So it's almost like someone has a lot of selling to do, right? And they're going to sell additional, right? Or, sell more of what they need to do into that strength to possibly even get a better execution price too, because they're selling at a higher level, right? And then of course, through the last hour of the day, we took out the lows there. So it kind of is a hint, like if you can't turn the corner here, it just shows, hey, someone really has a large amount of equities that they need to sell. So you could speculate on what the reason is. I went over, it could be something that has to do with, hedge funds that have a model based on what interest rates are doing. So that could be part of it. And it could just be that, hedge funds, there could be a hedge fund that is under distress too. Notice what happened. We were kind of talking about this in the room today, but look at what the ARK ETF did today. Still down on the day, right? So this is of course high growth innovation, but it was only down 1% today, 1.3%. Why do you think it was only down? Of course, I know nobody can answer me, but why do you think the ARK fund was only down 1.3% and the Qs, right, which have more earnings in those names and a better, valuation in terms of, many of the names that are in there versus the ARK Innovation Fund? Why do you think this was down 2.3%? Right. Well, it's probably because hedge funds don't own many of the names that, your bigger hedge funds or your bigger institutions, your pensions, they probably own more of the names that are in the Qs, your Apple, your Microsoft, your Google, right, your Facebook. So those funds may be seeing withdrawals, right? And they may be having to sell, right? So I thought that's, kind of just to give an explanation about, for instance, why is Microsoft down 4%? Well, Microsoft is heavily owned, right? It's a name that there's a lot of institutional money that's tied up in, right? So they may be liquidating right now. And interesting that this has given back a lot of the move. I was in Microsoft last week. I actually got stopped out of the trade on Friday. I kind of try to let this thing come back, and I had to make a hard decision and say, hey, this thing isn't coming back and it's below the 200-day moving average. And I actually gave it a little bit more tolerance. And I added to it because it's Microsoft and a quality name. But hey, just because you think it's a quality name, these names, if they are, some of them, you can consider them overcrowded. So I got out of this name on Friday. It just didn't look like it was improving. Not holding top of value area, so removing. I could have also said it's not improving, but I sold this at 299 down to 285. So, I review this, and sometimes I review my losing trades because I talk about this a lot during the year, is that, there's there's this feeling, I think, by younger traders that they think that they can go into somebody's trading room or follow someone that has more winners than losers. There's a very small difference when if you've kind of been around the block in terms of trading, that basically what it comes down to is that most the very best pros out there, right, they have a winning ratio, and I'm talking like Jim Simons of Renaissance Capital. Like, he publishes his win rate, one of the most legendary investors out there. His win rate is something like 51 or 52%. That's it, right? And he's one of the most savvy guys, right? So you have to be aware that if you're trading for a living or even trading part-time, your losers are what's going to define your year, and you've got to get rid of the losers kind of quickly, right? You cannot have big losers, right? No matter how important you think it is to have conviction and whatever they call diamond hands, right? Probably the worst phrase that has ever come to trading is diamond hands, because you have to get out of your losers. You cannot stay in them, right? That will define your year. If you're trying to be, if that's your metric, and that's my metric, is to try to be profitable every month and obviously try to have a profitable year. You cannot stay in losers and think that that's going to happen, right? So sometimes I'm a little bit reluctant. When I grew up, my nature was to be stubborn. Being stubborn is one of the worst qualities you could have as a trader. It's good to have conviction, right? But and good to have confidence, right? But you also have to have confidence in your trading system and to know, like, hey, this is a bad pick, you got to get out of it, right? The market, right? And that's another thing that we talk about a lot, is that myself, anyone, nobody's bigger than the market, right? And the market's not wrong, right? I talk about this because we've heard this being said, particularly by ARC management. Oh, the market's not right. No, the market is right. You're wrong. And you have to change and you have to adapt with it. I don't want to get too off track with the ARC stuff because that goes down a whole nother avenue. But anyway, that's my opinion on this. And so let's get back to the technicals. But I think it's very important. I try to review that in the, more than the technicals or individual picks, it's really the trade management and the discipline. And that's the hardest thing in trading. It's a lot easier to go through charts and find setups and so forth, right? That's the fun part of this game, right? In my opinion, and to find those new trends and to find breakouts. That's great. That's fun. The hard part is days like this, or days like we've had last week, and saying, hey, I got to sell this position for a loss. Right. It's particularly tough for me because I run a trading room too, and I hate to put on trades, that don't work. I only want to, call out winners, but that's impossible. All right. It's not a level of how good of a trader you are. The trading, like I said, is often defined on how quickly you could take off those losers, and then also how long you can keep those winners on for too. Now, this is a very difficult. This 2022 is a very difficult year because, depending on the group it's in, the stock, some names only go up for a couple of days and then they give it all back, right? There's been other groups that are very unpopular that continue to break higher. So those are believe it or not, those defensive areas of the markets have been the ones to where you can actually really ride the winners, right? So S&P, so the issue here, there's a couple of important things here, is that we broke support here. So we'll see if this changes for the week. And I think at this point, it's important to monitor, but we broke the 50-day moving average last week. And this again is really tricky because it seemed like we were kind of trying to carve out a low here a couple days last week where we actually were holding above the top of value, holding the 50-day moving average. So it looked like we were trying to basically turn back up, which would be a normal move. After you've had a move like this, there is some retracement, and then you would start to move back. But the way that this market has been going, it's been doing the opposite of the conventional wisdom, and basically now continuing to fall. Even though I thought this would be a great place to kind of add risk, right? This check back into top of value. But if we don't hold this 44.24 as well as the 50-day moving average, then it's a big no-no in terms of that. And the NASDAQ, you could see, has, even after that check back, just has not stopped going down. So your guess is as good as mine in terms of where this one goes, because I don't see support for a while here in the NASDAQ. Now, we did, oh, look at this. We did not take out a VPOC. We're going to wait to the system. So potentially the next spot here is 13,759, right? That's another 1 hour VPOC. Right, that's back in here. That's right where we kind of started this rally. We did not spend any time in this value area, and this left a big old virgin point of control. So that's 13,759. If you want to level in the Qs, right, that's around 334. But you see the concept here, right? We kind of left behind a dead body on this rally, right? We went up and we kind of gapped and just continue to go. So now we're coming back and we're retracing this, and we're looking for a level of high volume that has not been revisited, right? So this 334 that I see in there, and that's, I think, really the next level of support. Other than, we're at the point of control for the month. which is the most volume that occurred in March. So maybe that might provide a little bit, but generally point of controls, unless they're virgin point of controls, don't really act as much support. All right. And then finally, IWM was hanging in there for a portion of the day, was actually went positive in the morning, but that finished red as well. All right. So let me go back to my spreadsheet. We'll talk about a couple of names, but risk off. Breath has also been, that's another thing too, that every day when I see the market open, and I don't see positive breath, that also tells me, hey, we're going to have a tough day. And I try to sit on my hands a little bit when we see that. Interesting. Some of the other underperformers actually were green for the day. The home builders were green. Cyber stocks were green today. We had a deal announced today, which kind of gave some of these names a little bit of strength. But one name I'll be watching tomorrow is Palo Alto. Of course, I didn't think it was going to close on its highs. But still, I like the digestion into the 20-day moving average. It did close above value. And I think that Palo Alto is best in breed. All right. Another name too, and I was in this name last week and I took it off. Of course, today it rallies 6%. But if you're looking for other names in this group, cyber is another one that I think is showing relative strength. TENB is another name too, showing relative strength. Again, I want to be in the names then, and within this group, the strongest names. I got a couple of questions about some of the weaker names. That's too difficult. You're dealing with a market that is very, very difficult. I would rather be in the names that are holding up better. I always want to be in the relative strength names, not the relative weakness names. Okay, so I think this group is interesting. We'll be watching this group this week, certainly, because I do have a small position on in Palo Alto. I haven't added to it yet, but I'm kind of looking at that. NTR. Nice to see a green candle out of this one. This was a trade that I took today. I still like the agriculture names. We saw some call activity in this one, so I was lucky. I was able to take a target in this one. Going back to, again, I have to show, it's important to show these. I waited a day too long. I took off Microsoft. I was giving myself not necessarily a pat on the back, but just saying, hey, that was at least a good move to take it off on Friday. I was in the same boat with Intuit, and I decided to leave this one on. We saw a lot of call action in this name about a week ago. There's been no follow through. I gave it the benefit of the doubt that it might hold the top of value, but certainly not the gap down into the value area. Again, so trading through value areas, I'm trading a breakout, right, of a range. If it falls back into the range, don't really want anything to do with it. Important thing to do is put the alert back at 484, which is just above the value area. I have no problem getting back into that name if it sets up well. All right. A couple other things that I thought were just interesting for the day was gold. Gave back gold. We've said this before. I'll say it again. Gold is tricky. Gold is not an easy trade. Newmont and some of these names, and these were on our weekend watch list. The gold miners were some of the worst performing names today in terms of where they opened versus where they closed. You could see GDX down on the bottom of my screen down here was one of the worst performing areas after the open. So it had nice gains in the beginning of the day. If you are trading actively, if you can, take a target pre-market. Some of these things, and that's been the case sometimes, is some of these names, same thing with energy, they'll be up 2-3% pre-market. Take a little bit off, trim a little bit off into that strength. It may continue higher, but it may not, like a Newmont today, right? Here's where this thing opened, right? 83.91 was the high of the session, right on the, right around 9 o'clock this morning, or sorry, on the open, right? And then it dived for the rest of the day. So it's tough, but if you're being disciplined and taking some targets and trying to get a home run, you could go for the home run with the last portion of the trade, but I always right now in this market are making sure that I get my first target in, just like I did with NTR, even though that's not a big target, right? A dollar 70. But hey, this is one of the few names that I see up that actually did pretty well. You got to sell a little bit into this right now. Um, Again, and I'm not telling anybody what to do. I'm not giving advice or recommendations. I'm just saying what's working, right? Because a lot of times these names, and again, I don't have a crystal ball with this one, but a lot of times when I take a target and a name, the next day it's down 2%. I could add it right back. I've been doing that with Tandem several times. Right, Tandem. Every time this, I've been in and out of taking targets with this name. Strength, right? Take a target, goes down all the way back down to 117, right? Re-add. Here's another one. There's this day I added on this one, I believe, all the way down to 114. Next day it's up to 123. Right. So if you like the trend, I did not add to it today just because I've been doing that a little bit too often with this name. But tomorrow, if it's weak, I may do that. But you're just letting you're giving yourself some flexibility in being nimble like this, because this market is not giving us the best trends, right? So into the choppiness and into the weakness, some of these stronger names, that's what I've been doing. I tried some Home Depot today. It just kind of ran out of steam today. It got rejected at that bottom of value 311. So I took that trade off. Again, I took a very quick first target in this one and then was out of it. Lastly, let's talk about, I usually don't talk too much about the headline names, but I find this one very interesting. This Twitter right now, very interesting. Elon kind of took himself out of the conversation about being on the board. Doesn't that I was just watching CNBC talk about it, and they're saying what, he doesn't want to be a part of it anymore. I actually think that he might be looking to do some type of a hostile takeover, right? So here's the article on this. And you could debate whether or not there's any validity to this, but it could be that he just doesn't want to be a part of that, right? And may basically look to say, hey, I'm going to get involved, and I don't want to really deal with some of the old management. So could be an interesting move here, right? In here 47, I actually started a position into the weakness last week. And I think I'm just about flat right now. I think I put that position on at 47.22. I closed out 47. So I like having a little bit of speculative position in case something happens. Again, when you say speculative, you have to have the right position size on to be able to do that. Right. All right, guys, that's it for tonight's video. Again, you just kind of have to take these days one by one, a day at a time. And if you're playing things mostly to the long side, like I am, I don't really like shorting in the hole. I do from time to time put on shorts, but when we open up like we do, like down 1%, I'm usually looking to play it on the long side versus press shorts. Right now, it's worked pressing to the downside, pressing shorts. And shorting in the hole has been working because we've had a pretty weak market the last week, but it's just not my style to be doing that. So if you're playing, bottom line is, if you're playing things mostly on the long side, like I am right now, basically just not getting overexposed. If you have a down day here or there, it's not a bad thing considering how bad this market is getting shelled right now. Again, S&P was down 1.7%. The Qs were down 2.4%. So it's pretty nasty selling. All right, guys, have a great night. See you tomorrow.